So Israel has struck Iran with the purpose of damaging their nuclear capabilities. This is breaking news. I'm jumping on the recording to be able to talk about this because I know it's important to a lot of you out there. So this is not going to be edited. This is just straight from what my thoughts are at this point regarding this new situation, this new involvement. So us as traders, we care about how the market is going to react. And most of us, we think that when wars break out, that the markets are going to drop. So if you remember when Russia invaded Ukraine, the markets had a muted reaction. Went down initially and maybe went down over a short period of time, but we went back to all-time highs very quickly. When Israel had an issue with Hamas, the market's drop was very, very transitory. It came back up very, very fast. So this might be a little different if the United States gets involved. And because it's Israel and it's the Middle East, the United States might get involved. So this is why you have seen oil spike up. We haven't seen oil in the 70 range for a few months. This is why probably some of the economic data that's been coming out, like the CPI, the PPI, the inflation type of data that's been coming out has been in line or even better, is because oil prices have been very cheap, and that's how we kind of transport things all across the globe. And so oil prices have helped keep prices down, even though tariffs have increased the cost of the globe. So now that can be a big game changer. Prices can see a significant rise, not only from tariffs, but from now energy prices. So hopefully that won't be the case, but that's what the market is saying right now. Normally, when we have these type of situations, bonds are going to jump up and interest rates are going to go down. That's barely happening at this point. As you can see here, this is the 30-year, this is the 10-year, this is the 5-year, and this is the 2-year. They're barely flat, like nothing has happened. So that's a kind of break from the traditional type of behavior for markets. The US bonds are not becoming the safe haven. And also normally the dollar, people will buy up the dollar. And so let's see what the dollar is doing at this point. So you got the euro is down against the dollar a little bit, but it was up during the regular session. The pound is down. It was up during the regular session. The Canadian dollar is down. It was up during the regular session. You can see the Japanese yen is up and the Australian dollar is down against the US dollar right now. So we can say maybe people are buying up the US dollar. What are they doing with Bitcoin and Ethereum? Well, they're actually selling Bitcoin and Ethereum right now. They're significantly off where they were during the regular trading session. So what is the safe haven? Well, gold has jumped back up. It's not up a ton at this point, but it's back up a lot, or it's back up nevertheless, I should say. And then you got silver up a little bit, but not a lot. You got copper down. So it's a kind of a mixed bag at this point of how the market is responding to this new situation, this Israel striking Iran. It's really interesting that Israel decided to do it while the global markets are still open. They're doing it on a Thursday night here in the United States. And then you know they had to get approval from the United States administration, from the Trump administration. And so we kind of got this warning when the United States started to say they're going to remove some people from embassies in the Middle East, but just didn't think it would happen this fast. So this is kind of maybe Israel kind of trying to keep Iran off guard. So now it's going to see how does Iran respond? Are they going to respond in a way that escalates the situation and Israel goes all out the way they have in the Gaza area, the Gaza region? We'll have to see. But for now, what we're telling our members here at Dorian Trader is to be more vigilant. We were just saying that today. We think the markets were going to all-time highs. This is a little speed bump, so the things have changed. But in the past, these kind of wars, these kind of situations have been very, very transitory. So we'll see. But what we're encouraging members to do is be willing to wait things out by being okay with owning shares, by doing collars on underlinings, so that if things go wrong, you can wait it out. You can protect yourself without serious damage to your account. And so you can see on this screen, we have a lot of red going on. The SPX is not open right now, but you can see that it's showing a big drop. We have a 1 DTE trade on in there. That's going to be a tough one. It's going to be in the money in the morning. We were 100 points away when we put this trade on just before the market ended. And then we have some other type of positions, but it's not that bad in the scope of things based on the size of this demonstration account that we use here at Dorian Trader. We were prepared for a drop because the market is at all-time highs. We thought it was going to, or near all-time highs. We thought it was going to get there. This is a little wrinkle. We'll see if we continue the pattern of the evening session with red and the market makes its way back to green once we go into the regular session, the regular trading hours. Tomorrow we might start off red for a while, but it's a long time. A lot of data is going to come out. A lot of reports are going to come out. A lot of interviews are going to take place, and we'll see how it plays out. But what we encourage our members and what we encourage whoever's listening to this video at this time is to just be vigilant. If you have money on the sideline, stay on the sideline for a second. If you want to kind of stick a toe in, do it very, very small, because this could be just the beginning of a down move. Because once the market starts to kind of put all this kind of uncertainty together, it might decide that it's time to sell off a great deal. I hope that's not the case, because it's a lot of people who are going to be hurt financially because of decisions that are being made across our country and obviously the globe. And we don't want the situation to kind of spill over to Ukraine and Russia and China, and it all just becomes this kind of global war that a lot of us is kind of fearing. We haven't been able to get a deal with Russia, haven't been able to get a deal with Iran, haven't been able to get a deal with Hamas. No deals are being made that have been significant. We recently got some type of deal with China, that some tariff deal that just didn't play out. It hasn't been announced, so it seems to be weak. So it's a lot of uncertainty going on out there. And so the smart thing is to be vigilant, put on collar strategies. We talk about that regarding the safeguard strategy here at Dorian Trader. If you're interested in learning that, you can go to our website. You can see about the safeguard strategy. You can check out some of our other videos about the safeguard strategy here on YouTube. But just wanted to point this out, what's going on. Find some more information down the road, but for now, things seem to be playing out a little muted. We're down almost 2%. As you can see, the S&P 500 is trading right now down about 103 points. We're a little off the lows, but bonds are not up significantly. The dollar is not up significantly. Gold is up, but not significantly. The biggest thing that's jumped up was oil, and that's up about 7%. And as I indicated earlier, that is a problem because that has been a counter to tariffs to this point. But if oil starts to spike up significantly, that's not going to offset tariffs anymore. So be vigilant out there, you guys. If you have any questions, put it in the comment area. We'll answer all questions. But signing off for now.